everyone, it's Adam Cockburn here at Lowe Co Realty, and today we're checking out the Wellington real estate data for the month of May 2022, comparing it to same time 2021 and same time 2020. And in summary, folks, values are continuing to fall in Wellington, again with more supply than we've seen since 2015, and the message to vendors is, sure, it's getting tougher to sell out there. You can still do it, but you need to really be quite aggressive in attracting the attention of buyers. And for buyers, do not wait. Do not wait for conditions to get better. Get amongst it if indeed you can, and take advantage of the best buying conditions we've seen for many, many years. So let's get into the detail. Median sale price to start with. May 2022, median sale price of $895,200 versus $885 the same time a year ago. So that's 1% higher than it was a year ago. And you look at that graph there, you see the blue line, which indicates the monthly results. You can see where we finished up in May, $895,200 is about the same level as we were at in early 2021. So back down to that same level. Now, obviously on a month-to-month basis, these numbers can bounce around a bit. So if you look at the red line, that's the 6-month moving average. It's definitely been heading downwards over the last couple of months. Now, if you follow these videos, you'll know that this is really not my favorite indicator really of underlying values in the real estate market. The Real Estate Institute House Price Index is by far a better indicator of underlying value. So let's now have a look at that. And the results here are considerably more stark again, as we've seen over the last sort of 3 to 6 months or so. So in the Wellington region, over the last 1 month, values have fallen, underlying values have fallen nearly 3%, 2.8%. Obviously in 1 month, that's a big drop. Over 3 months, 9.7%, nearly 10% down in only 3 months. And if we compare it to a year ago, values in May were down nearly 7%, 6.9% compared to a year ago. So whatever uplift in values took place since a year ago, they've all been eroded and values have fallen further since then, further than that, by another 6.9%. So if we look a bit further into this, you can see the graph there. The blue line indicates the monthly house price index growth, or indeed fall as the case might be, and the orange line indicates the 3 monthly, the value growth over the previous 3 months. So the blue line you can see there, it really was only bumping up above zero in the small numbers since about March last year. So we really could see this slowdown coming if we were looking in the right place. And then since October, where we really reached our peak in prices, since then it's been for the most part negative, and over 3 months, obviously as it accumulates month to month on a negative basis, the 3-month number falls further than the 1-month number. So you see there, I mean, over 3 months, nearly a 10% fall in underlying values. That's really quite significant. In terms of how long can this continue for, obviously I'm only one person with one opinion, but my view is that prices are not likely to fall significantly from here. We are down in Wellington region by about 13% since the peak at the end of October of 2021. In the city, it's nearly 14% since then. And it's very, very unusual for prices to fall even that far in a matter of only 6 months. So, I mean, I suspect that we won't see a huge drop further than where we already are. And if we look a little bit closer, or just to dig a little bit deeper into that sort of question, I got here a few graphs from Tony Alexander, obviously very well-known independent economist, and thanks Tony for these fantastic analyses. What these graphs show you is the relative value of the underlying property market in a certain neighbourhood, a certain area, compared to their long-term trend as a function of the New Zealand values. So if, for example, the line is above the long-term trend, what that is indicating is the values in that area are significantly above where they tend to be in relation to the nationwide values on a long-term basis. So I've picked a few areas here around Wellington City. So if we look, for example, at Horowhenua, so that's, live-in and surrounding areas, according to this analysis, the market is something like 32% higher than where it normally would be compared to the nationwide average. Now, does that mean it's going to revert back to the nationwide average, a fall of 30% immediately? No, it doesn't. It could stay up there for some time, but what it does indicate is that that location is more susceptible, perhaps, to price falls or value drops than other areas where the relative value is below the long-term trend. So let's look at another couple of areas around Wellington City. So Lower Hutt there, again, you can see significantly above its long-term value trend. You can see it's started to come down quite a bit since its peak, but it's still a long way above its long-term trend. And the same can be said of the Kapiti region. So these regions, these are not Wellington City, but a couple of those places, Lower Hutt and Kapiti, they are included in Wellington region. But if we have a look now at Wellington City, very interesting indeed. You'll see there that the value in the last sort of 6 months or so did shoot up above its long-term norm when compared to New Zealand averages. Since then, it has fallen back to pretty much spot on where it should be according to that long-term trend. And so Wellington City is the only area in the Greater Wellington region where this is the case. Everywhere else seems to be above the long-term trend in terms of value, apart from the city. And so on this basis, my conclusion is Wellington City is the area that is the least susceptible to big value drops from here. Will that actually be the case? Who knows? But on this basis, that's certainly what that is indicating. So perhaps for those of us in Wellington City, those of you in Wellington City, reassuring. We perhaps have seen the biggest price drops or the majority of the price drops that we already have. Let's look now at the other details. New listings, 675 new listings into the market in May 2022 versus 622 in May 2021. That's an increase of 9% over a year ago. And 548 May 2020, that's up 23%. Now remember, May 2020, we were just coming out of lockdown. Perhaps an unusual time, definitely an unusual time. So let's perhaps throw that number out and compare just to last year. So look, we're not seeing a massive increase in new listings. It is a bit more. So anyone who's out there thinking that investors are just rushing to the market and offloading all their stock, it's not happening. Anyone who thinks that a whole lot of vendors are under extreme pressure from inflation and interest rates going up and that sort of thing, and they're having to sell under duress, it's not happening. We are seeing a small increase in listings come to the market only. On the sales side of things, May 2022, 517 sales, and this is definitely a different picture. So we've seen a significant drop in the number of sales taking place. Not a big increase in listings coming on, but definitely a big drop in sales taking place. So 517 in May this year versus 735 a year ago. That's a big drop, 30%. Compared to May 2 years ago, it was about the same at 534, a drop of 3%. So that's interesting because in May 2020, it was just coming out of lockdown. It was the tail end of lockdown. And so we're selling even fewer properties than we were selling immediately coming out of lockdown when the market had been essentially closed. So a 30% reduction compared to 12 months ago really is quite low. And again, if you look at the shape of the graph there, you can see from the red line, that's the 6-month moving average, we are lower now in the last 6 months than we were including the period where the market was essentially closed in a full lockdown. So it's very unusual for the number of sales on average in a 6-month period to fall down below 600 a month, and we're down to barely above 500 a month. So this is certainly quite a stark kind of a result. This is the lowest we've ever seen since I started collecting this data way back in early 2015. So sales certainly have slowed down, and it's not because, as we did see for quite some time, it's not because there's very little to choose from on the market. It's because the buyers are stepping back. The buyers are getting crushed by the triple CFA rules. The buyers are, the FOMO has disappeared. Buyers are thinking, well, if I wait another 3 months, will I get a better deal? And so they're able to be much more selective, much more choosy. Great news for those of you who are buyers out there who can actually move, who do have the finance. What about how long is it taking to sell a property? It is taking longer and longer and longer. So in May 2022, 55 days. compared to 24 days in May a year ago. That's over twice, obviously 129% more. And again, fascinating, in May 2020, it was taking 55 days, and that is a result of the total lockdown. So it's now taking as long to sell a property as it did when the market was fundamentally closed. So again, this does paint quite a stark picture. This is a long time compared to the long-term averages. And again, you look at the graph there, you can see the blue bar chart. This is the highest number of days, the longest duration to sale that it's taking ever since I started collecting this data by quite some margin. And the red 6-month moving average there, again, you can see it's been climbing steeply over the last sort of 12, 15 months or so. So it has been taking a long time to sell property in Wellington. Looking now at the inventory, inventory remains pretty high compared to long-term trends. 20 weeks in May versus 5 weeks in May 2021. So that's an increase of 300% and an increase of 122% over the 9 weeks we saw in April 2020. So again, looking at the graph, you can see the 6-month moving average there is like a hockey stick. It's like a steep Nike tick. It's heading skywards, and we've never seen this amount of inventory again since I started collecting this data in early 2015. Looking now at Trade Me listings, so as of a few days ago, 2,828. These, of course, are current numbers, June, not May, versus 1,085 a year ago. So that's an increase of 161%. So broadly speaking, that means that for every 10 listings that were available to buyers a year ago, there are now 26. So the choice has really exploded for buyers, which again is fantastic news for those of you who are out there who can actually move on a purchase. Compared to 2 years ago, still a huge increase of 85% because that was 1525 back then. So yes, Trade Me listings, 161% higher than a year ago, more listings than we've seen in any other June since 2015. Now interestingly, you look at the blue bar chart there, you can see the number of Trade Me listings actually starting to decline. That does not mean that supply is tightening up. That is just a seasonal effect. We are now into winter, and winter is winter of the months where the number of listings definitely reduces. So compared to other Junes, the amount of listings, the amount of stock on the market is still enormous. So in summary, folks, median prices and values continue to fall, and in fact values are down about 13% since the peak, which was at the end of October. New listings up versus 2021 and 2020, but not up enormously, just a small increase. Sales volumes, on the other hand, down significantly. Duration to sell up significantly. Inventory remains very, very high, 300% higher than a year ago. We're seeing more Trade Me listings than any June since 2015. The message to buyers out there is do not wait for things to get better. The conditions are remarkably good for you guys out there. Please don't hesitate. I'm sure there are a bunch of you who are, but my bet is that in time, many of you will rue the fact that you did not move on a purchase. So thanks for checking in. We'll be back again in a month. It's Adam here at Lowe Co Realty. Cheers. See you next time.